Hey, this is Similolu, and in this video, I'm going to go over why I've added NIO to my investment portfolio. Now, NIO is a Chinese automobile manufacturer headquartered in Shanghai in China. They design, manufacture, and sell smart cars. Earlier this year, NIO was trading about the $5 price mark. And I like stocks that are on the cheaper side, but still have room for growth. I also like the fact that it was in the electric vehicle category. We've already seen the impact that Tesla has had on the automobile industry, and so I was interested in NIO. Now, I consider this a growth stock because obviously it has potential to grow. The beauty of buying such low-priced growth stock is that, well, the price is low. But seriously, the lower the price of the stock, then the more shares you can pick up. Now, if I wanted to trade in Amazon today, I'd need a cool like $3,400 just to pick up one share. Not so with NIO. Also, being a growth stock and being new in the electric vehicle category, I figured it had room to grow. And about that time, Tesla was trading about the $400-500 price mark. So I invested in NIO. Now I'm going to show you what can happen with a growth stock, how it can grow over a period of time, and why probably you want to ensure that you have some low price growth stocks in your investment portfolio as well. Now let's see how the price of NIO has outperformed the S&P 500. So for the same amount of money invested in NIO as well as in the S&P 500, you would have been down 3.92% if you had put your money in the S&P, but up 11.5% if you had put your money in NIO instead. Now, bear in mind, NIO is considered a growth stock, so you can expect these almost irrational increases in price to the upside. Now, this is all current news for October 2020. NIO recently raised up $1.3 billion, and that is definitely expected to contribute to the increase in price, as well as the fact that it's buying back some of its shares, and that always is an incentive for increased price action. We see them being innovative in the area of offering their battery as an extra service. So they have a model of a vehicle or a subscription model whereby their customers can purchase the electric vehicles without necessarily purchasing the battery pack with it. So if the customer has their own battery pack or wants to shop around for something cheaper, then they have that as a separate option. As well as that, NIO are planning to launch its electric vehicles in the European market in this coming year of 2021. Now, while the market only expects Tesla's revenue to increase by 30.5%, the expectation of NIO's revenue is that it increase 137.7% in the current quarter. Now, this is 4 times the expected growth of Tesla, which in itself is an excellent reason to have NIO in your portfolio. So definitely both Tesla and NIO are strong performers in the electric car industry, but wait for it. NIO is the better buy right now considering the fact that it has significant growth potential in the upcoming quarters. This is a monthly NIO chart, and you don't have to be an expert at reading charts to see what's been going on over the past year or so. We can see how the price of the stock has skyrocketed up over the last, particularly over the last 6 months. The key question to ask now is, can this run up on NIO's price continue? And the answer to that is yes! Unless something disastrous happens, the price of NIO's stock is destined to increase significantly over time. Herein lies the beauty in owning growth stocks such as NIO. Well, that's it, folks. I hope this video has proven useful, and really I'm looking forward to you coming back and letting me know in the comment section below how this has helped to improve your trading game. I certainly know it's helped to improve mine. Okay, now I'll see you guys on the next video.